Bob present. Welcome, Bob. How are you? Alone is here. Bob, Bruce, James, John, Milan, Raymond, Tread, Wes. All right. Can you guys see my screen? Can you hear me? All right, then let's start. Bob, can you guys see my screen? Can you hear me? Lalit, good morning. Can you see my screen? Can you hear me? Just type in yes if you can see my screen, you can hear me. Oh, Bob, yes. Okay, very good. Then let's start. Welcome to Tradespoon in Yellowtown. My name is Vlad Karpel. I'm CEO and founder of Tradespoon and Yellowtown. And today we're going to have a live trading room open to trade stock and options. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. I also want to welcome new subscribers. My brief bio is Executive Vice President and Head of Technology at Options Express from its inception to 2007. Options Express was an online broker-dealer acquired by Charles Schwab. I want to take this opportunity to say thank you to all the subscribers. Started Tradespoon in 2012, started Yellowtown in 2018. Because of you, I'm able to do what I enjoy professionally, managing and trading my own money. I've been doing that for over 15 years, mentoring and teaching subscribers how to trade stock and options. And finally, I have a master's degree in computer science, specializing in statistics and artificial intelligence. Disclosures are very important. If you're new to trading or you're new to Tradespoon or Yellowtown, I'll encourage you to visit optionsclearing.com, this link, to understand the risks associated with trading stock and options. I'm not a financial advisor. I'm not registered with FINRA or SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also should not be assumed that the future trade picks will be profitable or will equal past performance. Again, let's go over some of the psychology terms, trading psychology terms. One is the economy of control. What it means to me is process versus outcome. The idea is to concentrate on a process, right? On your trading plan, executing your trading plan, follow your trading plan, not deviating from your trading plan, and not concentrating on things that are outside of your control, right? Today we had an ECB decision, right? They raised 75 basis points. GDP is up, higher than expected. PCE is lower than expected. So you have these news in the market that will drive market up or down, and you don't really know what would be an outcome of these events. We have Fed decision next week, Wednesday, which is also important. We have midterm elections coming up. We don't really know what the outcome of them will be. So, but we can prepare, right? We can control our thoughts and we can control our actions. Those are the only two things we can control, right? In terms of thoughts, you have to stay positive. Don't use extreme words. If the trade goes against you, don't use, strong words. Try to go through labeling exercises. Try to find different words to describe, how you feel about your decision. And That would be example, and the actions are cash, right? There's three things that we have control over, irrelevant of what the market, if the rally will continue another 10% or market is going to sell off 10%. We can control how much cash we have, how many positions we have, and position size, right? The fourth one is portfolio composition, right? How many bullish and how many bearish positions. In the bear market, I would argue that you should not have all bullish positions or all bearish positions, right? You should do it kind of like a pair trading. You can have more bullish, more bearish position, but you should be ready that the market, can pull back or continues to rally, right? In both outcomes, you want to have at least some of your positions profitable. Because market does trade in the range. Negative visualization is important, right? Going through the negative scenario, right? Let's go over. For today, model predicted that the market is that the 380 level will hold. This is the third day we're trading above 380. This is a major support, was a major overhead resistance. We broke through it. And again, one day doesn't set the trend, but when you trade in 3 days above 380, that's positive, right? That's positive. So let's look at spiders. So day one, we broke through the 380, day two, day three, right? And regardless of, Apple and dismal earnings from Meta, right? Meta is down 25% last time I checked. Apple was down, 3 standard deviation, not Apple, sorry. Microsoft, Google, 3 standard deviation moves beyond implied volatility, beyond historical volatility. Market is staying above 380, right? So that's that's positive for the bulls, right? And outside of technology, the earnings are better than expected. So it's a big win for the bulls. You might argue that that earnings really don't matter, right? Earnings, bad earnings like matter, yeah, they do matter, and the stock will be down 25%. Or if Microsoft guides, that Azure, rate of growth is now 30%, where it used to be, 31%. I'm exaggerating, but it's slowing. So it will matter, right? But overall on the market, the only thing that matters are interest rates, right? We have ECB decision, we have a Fed decision. We broke through very important rate, 4%, right, on 10-year yield. Again, one day doesn't set the trend, but day one, day two, day three, we'll see where we're going to close. This is a positive for the market, right? Market is going to go down. Google will hold its lows, right? If the yield is going to continue going lower, Google will hold the lows, right? It's still at 52-week low, despite the same thing with Microsoft, right? Microsoft will hold the lows, despite earnings. Meta will not, right? Meta will not, right? Meta will not. But overall, QQQ will continue going higher, right? We did pull back to the downtrend and probably will continue going higher as long as the yields continue to break to the downside. So let's say you buy into this argument that at least short term we are trading in a bull market, bear market rally. I'm going to call this a bear market rally. In my opinion, we are trading in a bear market. Definition of a bear market: long-term lower highs, right? But let's say you agree and you basically say, well, market is at 383. I think we can get to 403 plus 20 points, right? Or maybe 30 points, right? Plus 20, maybe 413, maybe plus 30, right? We are at the end of November, right? No, sorry, we are at the end of December. GDP is positive, right? Big win for the bulls, better than expected. The US is exporting more than everybody. I don't know how that happened. Probably because they're building a lot of the airspace and defense. But anyway, the GDP is better than expected. ECB raised by 75 basis points. Fed will probably raise 75 basis points. Market wants to go higher, right? despite, you know, Microsoft and Google earnings, right? You know, maybe hope that Amazon and Apple will be better, but I think main driver are interest rates and the currency and the dollar. So let's say you're trying to capture 20 points or 30 points to the upside, right? Maybe not. We're already up about 10%, right? We went from 350 to 385, right? That's 10% move, 10% rally, right? Kind of similar to what we had in July, August. The question is, how much more can we go higher? So if you think we're going to go higher another 20, 30 points, you know, with the midterm catalyst, right? Looks like GOP, you know, red states are winning. Not red state, but Republicans have a good probability of taking over House and Senate. Let's say that happens. Market perceives this as positive, right? That's another bull argument. We're going higher, 20 points, maybe 30 points. What's your stop loss, right? Well, you have clearly defined stop loss here, right? 380. I mean, we can hit 379 by the end of today's session, right? Market has been volatile. Yields were going higher in the beginning, then they're dropping. So we're going to have that continuation. This is your support number one. The next immediate support is last week low, right? I would suggest 367. 367 is your stop loss, right? If you're buying right now, right? So if you, let's say, want to buy the market at 383, 367, it's about 20 points, a little bit less, just to keep the math simple. So your downside is 20 points. If we're going to drop below 367, most likely we're going to hit 350. If we're going to hit 350, most likely something happened in the market, we're going to go lower, right? This is the line in a sense between, you know, soft landing and hard landing, right? The soft landing, people who believe in soft landing, let's call it maybe 40% of all the market participants believe that we have reached the lows or we're very close to the lows. And this is a, you know, 30, you know, whatever, 32% retracement, right? 25% pullback. This is, you know, average recession, mild recession. This is good enough, right? If we're going to break through the 350 level, then, you know, then the hard landing scenario kicks in, and Goldman Sachs just came out and said we're probably going to go 30% lower from current levels. So another 120 points. So Goldman Sachs thinks we're going to get to 280, right? 280 or, you know, 300. So that, you know, you do not want to hold the position, long position, if the market decisively, you know, breaks below 350, right? Especially if you're a long-term investor, because it's going to drop lower. So I propose, if you're a tactical short-term trader, right, or mid-term trader, your 367 is your stop loss, 20 points. On the $10,000 portfolio, I propose to never risk more than 2.5% of account value. So that would be $250. $250. If you're risking 20, that's 12 shares, right? So 12 shares multiplied by $20. Stop loss, 20 points is your stop loss. So I encourage you to keep a journal. You know, I think if you maintain the journal for the next 3 months, if you go to live trading room or watch the recording for the next 3 months, you will see a significant improvement over your performance. I believe that. Otherwise, I wouldn't be here. That's important to journal, watch the recordings, or participate live. And every time you trade, you go through these calculations and these thought processes that I just outlined. You can be the opposite, right? You can say, listen, you know, European inflation is worse than expected, right? They are going to continue raising interest rates. We're already seeing, you know, capital expenses are going down. The retail real estate market is going down, which is a big part of GDP. This is temporary. We're going much lower. So same thing. If you think we're going to revisit 350, you're going short, you have your overhead resistance at 390, right? If we're going to breach 390, most likely we're going to 400, 410. So you can put a stop loss right above 390, right? Maybe 10 points, right? If you're selling short, I would say your stop loss is 10 points, right? 10 points. Let's say you think the opposite. Fed is going to raise 75 basis points, it's going to be a hawkish, and so that's kind of the idea. Let me know if you have any questions. Market just open, spiders continues to trade higher. All right, so let's take a look at so spiders continues to go higher. Interest rates continues to go lower, right? We're decisively below 4%. Big win for the bulls. Alon is monitoring YouTube. Oh, sorry. All right, so people watching, let me know if you guys have any questions on YouTube. So interest rates down, dollar is up, right? Also, dollar broke through the main support, 110. But one day doesn't set the trend, but that's that's optimistic for the bulls. So Comcast had earnings. So Meta is down 25%. All right, let's go over some of the trades. Fred, good morning. Raymond, good morning. Charles, good morning. John, good morning. Bernard. We'll go over the Apple trade. How far? Yeah, so we'll go over the Apple trade. Let's first go over Microsoft trade, right? Microsoft trade. This is an example where, I actually gave myself a D, right? Where, so let's go over the trades. And I think it's a good learning lesson. Okay, so Microsoft, right? So I did the iron condor in Microsoft. Right, I did iron condor. I collected $1.39 plus $3, so $2, right? So collected $2, almost 75 basis points, kind of the usual trade. Microsoft dropped, right? Microsoft dropped beyond, implied volatility or historical volatility. It dropped to 230, right? Below $5 on my strike price. And options were at that point $8, $8. So I could have taken a loss of, $600, or I could have hedged, right? So I decided to hedge and sell short Microsoft at 230.70. And if you were yesterday at the before we left, right? This is 1 hour chart right here. We were right at this point. I basically said that the best case scenario is that Microsoft is going to go higher, right? And then it's going to go lower. And here I'm going to close my short put, right? Close my short put. And if it drops below here, then I can close my short stop, right? So trading is about, especially, in a bear market, you have to, it's a vector, right? It's a vector. You have to be correct on time. You have to be correct on direction, and you have to be correct on the magnitude. Right? For day trading, obviously, it's more important that, right? Because you're making decision. This is, every hour, every 5 minutes. So I was correct on timing, right? Before we left at 9:15 Central, I said, in ideal world, the Microsoft will rally, and it did rally into 11. This is around 11 a.m., right? Chicago time, right into lunch. Obviously, I had to leave. I work out during lunch and eat. So what happened, right? The stock went to 237.5, right? 237.5. Or 238.5, right? It's 10:45. I have to go to lunch. And my position is now down from, $800, right? Where my goal is not to lose more than $250 on $10,000 account. I mean, my account is higher than $10,000. But nonetheless, that's my goal, right? For average retail investor, the goal is not to lose $250. So now I'm down $800, right? And, what is my decision, right? So my decision is that I have to exit out, right? I have to be disciplined trader. I'm down already 2 times $250, or 3 times. I have to exit out, right? I have to exit out only to see that the stock is going in my direction, and I actually could have made money on this trade, right? Instead, I lost money, right? So very familiar feeling. We all experience this. How do you prevent this in the future? How do you prevent this issue? Do I not go to lunch, or do I hire somebody to watch the market 24/7? What do I do, right? The decision is very simple, and it's a recurrent theme, right? I was correct on timing. I was correct on direction. I was not correct on the magnitude, right? My concern was I go to lunch and we can close the gap, right? Which can happen, right? We broke through this overhead resistance. We could have went to 242, right? I don't think it's possible to predict that this was the bottom, right? Because it was continue to go higher. So, right, the direction I was not, the magnitude I was not correct on the magnitude, right? Correct on direction, correct on timing, magnitude was wrong, right? It recovered almost half of its losses. So how do you prevent that in the future? In the future, you guys have to remind me that, maybe since average investor cannot lose more than $250, not to trade $240 stock, maybe $150 stock, especially that I had a choice to trade Google, right, or Apple, which Apple is trading at 147, Google is trading at 100. I could have traded Google. I chose Microsoft, right? I'm going back to my notes. I chose Microsoft because I think Microsoft just should work better in the current market conditions. Obviously, I'm wrong, even though, and I mean, I'm right, they had better earnings than Google, but nonetheless, market punished them almost equally, right? Very highly correlated. So that's a lesson. The lesson, it's a recurring theme, right? Can I beat up myself and say, next time, don't go to lunch, or next time just predict better magnitude move? No, you get emotional, right? You get emotional because I know I have to, $250 is my stop loss. It really doesn't matter. Once I reach that, I have to exit out. So the only way to prevent this is, again, it's number of positions, position size. $237 stock is probably not appropriate to trade for average retail investor if you're trading 100 shares, because you are trading $23,000, right? If I trade 237, 1% move against me, that's $250. 2% move against me, that's $500. 3% move against me, $750. Irrelevant if it's a long call or short put, right? The same logic applies, right? It just depends on delta, but you get the point. If I trade Ford and it moves 2%, 1% against me, okay, it's 10 cents. 3% against me, it's 30 cents, right? So Ford is much better than Microsoft. So you need to figure out what size, right? Probably on a $10,000 portfolio, you should not trade more than $100 strike, right? And you do one contract. And if you trade in Ford at 100, you always do it at the same increments, right? 100, let's say $10,000. So you always trade $10,000. You always trade $10,000 if you trade in options, right? That means you can do one contract times 100 shares. Right? If this is, let's say Apple is a little bit more, and if you're doing, Ford, right? Then same thing, $10,000. Sorry, equal. Right, 100 shares times 100. Is a price, right? 100 times 110,000. If you do it here, let me know if you guys have any questions on Microsoft trading. And on this topic, I think this is a very important topic. This is kind of the difference between making money consistently or not making money consistently, right? If you consistently don't get this size correctly and you get emotional, right? If this was the same pattern on Ford, I would not exit out, right? Because I would be down, $100 or even $200, and I would say, I just need to give myself a little bit more time. But if I'm down more than, really don't have time. All right, let's see, any questions? I run in this situation a lot less frequently, right? A lot less frequently, right? I mean, you have to realize I have two different mindsets, right? Kind of multiple personality disorder. not disorder, but multiple personality. You know, I trade in my own account, right? And I have certain amount of capital that I manage, right? And there, trading Microsoft is appropriate. And I look at all these stocks, and I think Microsoft was the right decision to go with it. You know, if you have $40,000 in your account. But the second hat that I'm wearing is an educator, and I have to figure out, like, as a teacher, right? I have to target average investor that participates, average subscriber, right? An average subscriber is, you know, $10,000. Somebody who's been trading less than a year, that is an average investor, right? So I still think I made the right decision on Microsoft. You know, in my personal account, I made money in Microsoft. Because, as I said, you can do it before 8:30 o'clock in the morning. You can see that at 7:30, an hour before market open, Microsoft was at 235, right? And you already know that. I mean, first of all, it was at 242. Then it was 240, then it was 237, then it was 2. So you know that Microsoft missed gave lower future guidance. You know that Azure is growing less. You know it continues to grow lower. There's no reason to wait for the market open. You can go pre-market and sell short the stock. So I sold the short stock at, I think 237, right? So in my personal account, you can sell short the stock before market opens. And second of all, let's say I didn't, and I did it when the market opened, right, at let's say 30, right? Because I'm managing more than $10,000, just because it jumped to 240 or even 242, I'm still within less than 2.5% of my stop loss. As long as I'm less than 2.5% stop loss, I don't get emotional, right? I don't have to break my rules, right? Because I always have a choice. Here, when the stock went up to 238, I have a choice, right? Do I break my rules and kind of do what do the opposite of what I teach, or do I follow what I teach, right? I decided to not break the rules and exit out, right? And I actually exited out exactly at the top, right? So it is all about position size, right? Nothing else matters. It's not about your opinion about interest rates. It's not your opinion. Most of the time, I'm correct on direction, right? Half of the time I'm correct on the timing, right? And maybe 25% I'm correct on magnitude, right? Right. So direction maybe 75% I'm correct, right? Timing I'm 50%. It's a flip of a coin. And then magnitude, I'm 25% correct. But if the position size is correct, then I can give myself a little bit more time to be right. And I can give myself a little bit more room on the magnitude of the move, right? I don't have that luxury if the move is against me $250. What's the remedy? Do I, read more books or do more push-ups? No, the remedy is size. It's number of positions, trade size, and cash. So this is a perfect example where if you don't get the size correctly, you get into this feeling, oh my God, if I only waited, literally another hour, this would be a profitable trade, right? So instead of making $200, I'm down $800, right? So first of all, don't use exaggerated words. Write down in the journal exactly what happened, right? And my conclusion is that next time, unless I have a gun into my head, I'm not going to do $250 in the Tradespoon yellow account, right? I'm going to do $10,000, especially if I have a choice, right? Sometimes I don't have choices, but especially if I have choice. Any other questions? Oh, Fred, no, I'm actually kind of happy. I don't have a lot of big losing trades, right? Like, this is outsized loss, right? Which I'm not super happy, but it's a good life example, because it's one thing to show you, every day that's, you shouldn't have more than 4 positions, 2.5%, but it's easily said than done, right? I mean, you can say things, you can say a lot of things, but if you don't do them or you don't experience them, then it's harder. This is actually a good life example, and hopefully it will drive the message home, right? And next time we're not going to do Microsoft, trade, right? We'll do Apple trade, or we'll do Ford trade. Can Ford announced earnings so far? It's down 159. obviously it's lower. I would stick with General Motors. General Motors, the chart looks better. General Motors chart looks better than the Ford, right? Personal opinion. Speaking of that, let's another earnings trade. So let's close it. So we have short put. I'm going to close it, not to take a, so close the short put. So this is, same trade, right? But, this time it worked well. I don't have to hedge it, right? So I sold call for 9 cents. I sold put for 6 cents, collected 15 cents, right? Collected 1% on the Ford. And now, I'm out of the short put since in case market reverses and stock is down. So here I collected 1%. And it worked well. In Microsoft, I was down 3%. Did not work so well. And mainly because of the size of the position. Mainly the size of the position. Right? Because if you do always the same amount, let's say $10,000, then 1% up, 1% down, it kind of cancels it out. If you do one contract of Ford and one contract of Microsoft, then they don't cancel out. That's why it's important to always have the same position size in terms of the equity value. Can't make money on Microsoft. Hopefully I'm the only one who kind of exited out. That would be even better, right? I know some of you made money on Microsoft, some of you lost, but again, if you got the size correctly, you probably made money. If you got size incorrectly, you lost money, because I did call out correctly, wait for the rally and then wait for the pullback. Any other questions? All right, everybody wants to talk about Apple trade. So Apple announcing earnings, Amazon announcing earnings. Let's put them in our list. In 1 second. So we have Apple and Amazon announcing earnings. They're both down 3%, 2% respectively. Spiders is at 380, so market turned around, trading lower. And it continues to go lower. LUV, Comcast. All right, so it looks like Apple is fallen into the earnings. Well, first of all, I would wait. I would wait for end of close, right? Because I mean, we're down 2%. Market is turning around. We are sitting at the 380. If we break through the 380, you know, Apple could be down another 2%. So I would wait till closing bell. But the calculation are the same in terms of estimated move. Let's look at the estimated move of Apple. So it's trading at 145. 4 plus 3 is 7. 7 plus 3 is 10. And 10 plus, let's say, 14. So $7. So based on implied volatility, let's just do this again. It's roughly, I'm rounding them up or down, just it's a rough estimate. So 4 plus 3 is 7. 7 plus 3 is 10. 10 plus 3 is 13. So about $6.50, right? So it's 4%. Slightly, somewhere between 4 and 5%, right? So market anticipates move of 4 to 5% between now and Friday. 4 to 5% based implied volatility, based on the based on historical volatility. You know, Apple can move, you know, 10%, 8%, right? So so 10% would be $14. So $130. Can you get, what can you get for $130 stock, right? 130. 10%. Actually 25 cents. So if I get 25 cents plus 25 is 50. I want a little bit more, right? So maybe 75. So I would have to go a little bit closer. Let's see, 134 or 133. So 133 put. Let's see, Apple 133. It has to be like a Microsoft type of earnings, right? Where it just collapses and reaches the low, which is possible, right? But now it'll be $133 stock, so it'll be half, right? So in the same scenario, instead of me being down $800 if it's against me, I'll be down less, and hopefully, you know, do the pre-earnings. So same thing. I would maybe sell. Let's do 133 put. I'm gonna put an order to sell it for. Let's see if I can get by end of the day 70 cents, and by end of the day I would change it and get into this trade. So 133 put for 70 cents. Then I would hedge. I'm out of the 129.5 call, right? 129.5, that's the XLK trade. So right away, XLK is under pressure. Let's go back and sell it again into the next week. Let's see, kind of rinse and repeat this trade. I still have 50 shares, right? I have 50 shares of XLK. I closed the short put, I closed the short call, collected 1%. Now I'm going into the next week and sell the same 129.5 put for 93 cents, right? Option lettering, right? You can read up on it, right? Option wheel strategy. Again, you choose the right strike price. I think 100 is appropriate, right? We talked about that the 100 is appropriate. And then let's see, wheel strategy long term for consistent income. Right. So an investor continues to sell rights out of the money cash secured puts to collect option premium, right? I actually do puts and calls, right? Was a kind of just like an iron condor or credit call spread, credit put spread. So, and then if you do get a sign, right? If you get a sign, right, then you get a stock and then you sell calls against it. You know, how far out of the money, how many days till expiration should the option have. So it's, I mean, this is a good write-up. I mean, this is a crypto site. I don't know about crypto, but you know, the idea of option wheel strategy it's pretty good. It's a very popular strategy, but it has to be cash secure put, and I would do it with more or less, you know, obviously with Microsoft, you don't want to do it because it's too much. You don't want to do it with spiders because it's 380. You probably don't want to do it with semiconductors or QQQ, right? Because they are $200 stock. But XLK, well-diversified, well-known ETF at $100, okay, I can take the risk, right? So hopefully now this kind of makes sense. All right, so that's sold the call. That's XLK, Apple. I'm gonna wait till the end of the day and do the same thing with call. So what did I choose? 133. 133. That's $11. $11. That's, you know, 7 or 8%. So 2 times estimated move. I'm gonna go into 159. 159 call. 159 I can. So 157. Not a lot of enthusiasts. Let's see, 155. 155 would be $9. Yeah, it looks like we're pulling back. We might have a reversal. Okay, so the 157.5, that's too close. 157.5, and again, may have to adjust the strike price if it continues to go lower and I don't get enough premium, or if it does the rebound, let's try to get 55 cents, 60 cents. So I would have to adjust it, or just at the end of the day place a trade, right? Because again, we have ECB decision, right? And I assume there's a reversal in interest rates. No, interest rates are actually not reversing, so that's good. As long as the interest rates are going lower, you know, I think this is just I think short-lived reaction to the Microsoft and Google news. All right, any questions on Microsoft? Yep, Ken, thank you. Trade small, trade often. Have a put on Ford. Okay, thank you. All right, any questions? Where are we with earnings? Where are we with the market? Market is pulling back. I mean, obviously 380 is the line in the sand, so we want to carefully watch this 380 breakup. We retested it kind of off the lows, but we already retested the 380. We'll see if we can hold on to that level. Okay, let's go with the rest of the position. Give me 1 second. All right, let's look at the positions. 906. Any other questions? All right. All right, so Ford, I'm out of Ford. Microsoft, we talked about it. QQQ. QQQ, I mean, I'm a little concerned now, with obviously Google and Microsoft. We do have Apple and Amazon. We did pull to the downtrend. We break through the downtrend, right? This is the August downtrend. And interest rates are lower, right? So the bull argument is that as long as the interest rates are going to continue going lower, which that's the expectation, right? Because the narrative is changing, right? Looks like inflation is subsiding. We had a PCE print. I don't know why it was earlier. I thought it was supposed to be tomorrow, unless I'm missing something. But PCE data came in better than expected, right? 4.6. Okay, but it was core PCE 5.2. I think it, at least what I read in the news, just confirmed this. But when I was watching Bloomberg pre-market, they came out with PCE saying that that's maybe it's some different PCE. Maybe I'm got mixed up, but it looks like core PCE inflation is lower, right? And and you can see it across everywhere. Commodities, house prices, everything is coming down significantly, right? And rents are still high, but I think it's just a matter of time. So I think the narrative is going to start changing, especially after Microsoft and Google News or Meta News, is that companies are going to make less, right? The revenue is going to be year over year either lower single digits or negative, right? Google, like YouTube is negative revenue growth. So that means that at some point the rates will have to pause, right? Yes, 75 basis in November. Yes, 50 basis points in December. Yes, 25 basis points in January, but then pause and see what happens, right? And I think market is going to start sensing that, right? Because otherwise, why is the yield down, right? Well, because I think ECB decision. But anyway, as long as interest rates are lower, that should provide at least short-term momentum for QQQ, right? Eventually, QQQ is not going to hold 253, right? There's just no way, not after what Google and Microsoft announced. So the question is, do we go in straight line down, right now, or do we at least try to make 300 and then go lower, right? Obviously, my opinion hasn't changed. My core scenario, it's this, right? We go higher into after midterm election, we rally into 300 and then we drop, right? Worst case scenario, if Apple and Amazon have similar earnings as Microsoft and Google, then it'll be this scenario, all right? Because I mean, right now people kind of just scratching their heads, and maybe it's because it's advertising, and Amazon and Apple are not in advertising, so maybe that's going to be better, but we'll see, right? Microsoft, the problem is that their Azure, growth is significantly slowed down. It's still high, but it's significantly lower, right? From 40% to 30%. If Amazon says the same thing, that's their growth engine too, and they say, we're also seeing that AWS is growing at a much slower rate than before. Market is already kind of sensing this, right? Market is going to sense this and drop, right? And very quickly. Amazon is sitting not that far away from the 52-week low. I'm going to stay optimistic, right? Just because that's the kind of person I am. So I'm going to stay optimistic, and I'm going to say that the core scenario is this, right? So I'm going to trade based on my core scenario. So that's QQQ. Still have a small SH position. I think it's a little bit too early to start hedging aggressively. I think the right strategy, not the right strategy, but my strategy. My strategy is buy into pullbacks. Buy into pullbacks for now. So I'm gonna keep my hedges that I already have, but not add to them, and only add to the longs on pullbacks. XLF continues to go higher. Did they put that? So I think I'm getting close to exiting XLF, $3.60. So I do have a QQQ. We're getting very close on exiting XLF, right? Exiting XLF, the call spread, right? So I'm back into the call spread, 30-35. Again, advantage of trading spreads that when the trade goes against you, you can close the 35 call for 30 cents, and then you can open it for 65 cents. So now my goal is, we're approaching November, right? Could start closing all the November. I don't have any November, but December position. So I want to close XLF December call spread, 30-35 call spread, with the idea that by March market, will continue to fall. But the short term. So again, the idea of being long and short at the same time. In this example, was a different time horizon. Bullish in December, bearish in March. 30-35 call spread is about 20 cents away from exiting out. You should have received the message to close that call spread position. XLK, we talked about XLK. It's kind of an option wheel strategy. A lot of people, especially if you're doing spread, like a dynamic power trader, right? If you're a dynamic power trader, or if you're an elite circle, right? The idea is to kind of trade around this position. So I do have 115, 125 call spread in January. I still think X technology is going to continue going higher. And short term, I'm trading around this position, right? So I just sold 129 call that expires next week. Right, I closed the short put. Now I close the short call, right? Put and call, 56 cents plus $52.10. So I collected 1%, right? 1% in 1 week. If I can do this 50 weeks, that's pretty good, right? 50%. Not every week is going to be successful, but that's the goal. And then 1%, I'm doing $100 stock as opposed to Microsoft, $240 stock. So I give myself more room if the trade goes against me. And now I did buy 50 shares because I was concerned that the stock is going to go higher. Okay, so now I'm back, and now I sold 129.5 call. Sorry, closed at October 28th, and now rolling it into November 4. Any questions on XLK strategy? You can read up on option wheel strategy, well documented, very popular strategy, right? Selling cash secured puts, right? The idea of cash secured puts is that you have enough cash to cover that put, right? You have $10,000 account, you trade $10,000, right? You don't, if you have $10,000, you don't want to trade $25,000 worth of stock. Fed will raise rates again. July 2nd, November 2nd, right? So expectation they will raise rates next week sometime. Second leg of XLK is, well, I have the stock. So right now I just have a spread. So I'm out of the short put. I don't have a short put. Long put will expire as worthless. So I kind of have a ratio spread. I have 50 shares of stock, and I sold 129.5 call. So it's a cover call. You know, we're still far away from 129.5, right? That's the overhead resistance is 128.5. That's where we get close. You know, we have midterm elections. We have unemployment numbers next week. We have Fed decision. You know, we could break above that range, or we could stay lower. So if I do see the break, same strategy. If I do see a break above 128, we get into 129, I would buy 50 more shares of XLK. But now I'm a little concerned that we can pull to the downtrend, so I'm not buying more shares. Let's see, interest rates are lower, TLT is going higher. So that's good. Let's see, TLT is going higher, QD is going higher. QQ is actually reversing. Meta. Disaster. Okay. Comcast. So Comcast had good earnings. Nice. No. Okay. And finally, we have XOP. XOP. Probably the most unpopular opinion I have. I'm a minority camp, but I think it's overbought. I know you turn on TV, everybody's like buy energy, but again, it's all great, but you have these big pullbacks, right? So buying here, it would be, you know, the opposite of what I want to do. You know, I want to buy here, right? So when it drops to these levels, okay, obviously it's a good time to buy. Here, probably a good time to sell, right? So, and I think that pattern will stay. So for that reason, I still have a bearish put spread. Oil Minister, what did he say, Ted? It is my profound duty to make it clear to the world that losing emergency stock may become painful in the months to come. Okay. You know, Saudi's minister, you know, they're biased, right? Self-serving bias. They want oil prices to be, you know, not too high, not too low, right? So not too high, not too low. So it's a message to Biden that, you know, he will do what he's gonna do. But this is big win for the bulls. Big win for the bulls. Final TLTs finding some kind of a room. Okay, all right. I know C turned positive despite, you know, worse than expected earnings. Spiders turning positive. So again, very volatile market, right? Another observation yesterday, one of the reasons I got caught in Microsoft, again, you have this 277 to 272, 2% down. Then we had 4% up, 2% down, 2% up. So these round trips, right? 277 to 272 is 2%, right? To 284 is 4%. So you're gonna have these quick moves. Let's see. Well, hold on a second. I think I'm exaggerating. Let's see. Let's do 15 minutes. 26, right? So we had. Oh no, I'm right. So okay. So we had 284 to 278. We were 6 points. So 2% down, 2% up, 2% down, right? Or 4% down, 2% up. So these moves, -2, +2, right? -4, right? Percentages. +2, right? They're very volatile, right? I mean, we talked about that the VIX is still at 30. VIX at 30, it's 2% move is something you can expect, not only on daily basis, but on hourly basis. The only way not to get caught in them is position size. All right, that's all I have for today. Thank you very much. There is no closing bell today. Let me see, Thursday. Yeah, there is no closing bell. Oh, no, there is a closing bell. Sorry. Thursday. We do have a closing bell. No, scratch that. So I will see you today at the closing bell. I will see you guys today at the closing bell. I am traveling, but the flight is later. There will be a closing bell today. All right. Thank you, YouTube. Anybody who has questions? Thank you for participating on YouTube. Please hit the like button. Subscribe. Yeah, please, hit more like buttons. So click on subscribe, and if you find this useful, take the link to the YouTube and please share it with your friends on any forums. This will, A, help me, right? So you're doing a huge favor to me, and B, hopefully you're doing a huge favor to people who are gonna watch this video. So spread the word. You guys are my favorite subscribers. You're committed and you're spending, you're investing into education. I hope that there'll be more people like you. All right. Thank you very much and have a great day. Fred, thank you. Ted, Kent, thank you. William, George, Bernard, John, Charles, Raymond, Fred, John, Lalit, Bob, and everybody else. Thank you very much, and see you at the closing bell. Thank you, Phil.